All right, well, if you're watching this at home, welcome back to the live streams. Quick reminder, live class, April 24th. This date is subject to change. We might be moving the date of the master class to May 1st. We threw out a promo code yesterday, CA25, still active, I think, for another 2 hours. If you guys want to grab your seat, you have 2 hours left to use that discount code CA25 from yesterday to learn the NASDAQ 100 day trading strategy. If you guys were on the live stream yesterday, we were waiting for a very specific trade idea that did not hit until today. So it's better. It's when it comes to trading, a big problem that I used to have is when the trade wouldn't play out in the session that I was expecting, I'd leave the trade idea or I'd go find another trade opportunity. I play the better late than never game today. All right. So let me show you guys what that means. So yesterday we had these two levels marked off. It was 17,690 and 17,662. This was the area that the market was the higher level was the area where the market was creating local support and was going to launch from in that session. But I wasn't going to take that trade because it was too far from my ideal entry and the stop loss would have been too wide, ruining the risk and reward for the trade. So what I decided to do is just wait for that 17,660. Now I woke up late, and to be honest, I was awake at 2 a.m., so I could have caught this. This was during London session, but I was occupied with other things. We had double wick rejection at that higher zone, beautiful play all the way to that TP3. Then a clean retracement all the way back down to that 17,662. Never hit stop loss, wicked above, and then ran all the way back up to the top of the range. So it would have been such a clean trade from the same exact level that we were expecting yesterday. But right trade at the wrong time, or if you're not available for it, then you can't make money. So after that trade got completed, we had a second run, a kind of a retest back of that range and a closure back above. This one is not as attractive to me because we still were sort of filling this previous wick. We failed to create a higher high. And so the body of the candles all closing below the wick did not create a new range to the upside. So sellers kind of had more control at that zone. Buyers did not have enough juice to break past this previous high. So now what I'm expecting is a deeper retracement down to the 17,490 level. Once we hit this deeper retracement down here, higher time frame zones don't just get tapped and released. Higher time frame zones there's two options for a reversal at a higher time frame zone. This is for notes in case you guys are paying attention. The market will come very close, start to reject, come in for the grab and launch. Head down into the zone, miss, grab liquidity, and then launch. And the second is, damn, I'm blanking. Sorry, guys. I kind of hopped on here without any prep. I really just saw the market start to move, get pretty close to those previous zones. Figured I'd flip on the camera, at least give everyone an update before I get back to the day. We'll cover the other one. We'll cover the other one on another stream. Okay, great interviews dropping in the next 2 days. Make sure you guys are all subscribed, have notifications on, so you are notified when we go live. New York Open today was 886, failed the swing, seller stepped in. Cherie's very good observation, 100%. The real opportunity was during London session of last night. Now we're dropping into that 490 zone. When it gets to the 490 zone, don't just expect to tap and go. It's gonna grab through. And if we want to get very specific on the levels, Chart Addicts members, I'm going to give you guys two very specific levels within this big range here that the market could reject from, because obviously this is about a 200-point stop here. And I'm not a swing trader, so I'm not going to be looking to take this as a swing trade, excuse me. So how do you reduce your risk when you know the market could break through? I got to be selective here. I can't give out too much sauce. Yesterday, I was giving out a lot of game. In the past 2 days, I was giving out a lot of game regarding risk strategy and scaling in. And I know a lot of people were getting some benefit from that. but I don't want anyone to confuse themselves into thinking that's all you need to be profitable with the strategy. And so there are certain things that I'm going to stop sort of giving advice on, sort of like the execution here and the exact price entries, because without context, it's going to be a very dangerous game for people to play. It'll work for 2, 3 times. You won't really know why it's working. You'll start to over leverage and it becomes an issue. What I'd much rather do is show you guys how this works in real time and just give you that big piece of warning, which is when markets hit the higher time frame zones, most traders expect this. This is why most supply and demand traders are losing, right? They expect this and they don't expect, give me your money and then launch. And this happens every day on every time frame, on every pair, forever, for the end of time and always. And the tap and go happens every once in a while and people feel FOMO and that's what they remember. Make sense? We don't remember the stuff that happens every day. We remember the thing that we have the most emotional reaction to. And if missing the trade because of a tap and go hits you emotionally, you start to think that every trade is going to hit your zone and tap and go. You feel FOMO, as opposed to understanding that markets don't move in a straight line. And there's typically a re-entry opportunity. There's typically a liquidity grab. There's typically 15 ways till Sunday for the market to kick traders out. All right, put something in the chat if we're all on the same page. I'm going to run through the pairs real quick before markets start moving. UJ, massive, massive move yesterday. Bitcoin having in a few days, and we're seeing the retracement. People, tell me God ain't good. Come on. Come on. Roy, is this box theory? Roy, we learned about this in the class. Does it really work on Bitcoin? Roy, is this the break? And is this the new floor of the box? Can you really draw your fib from low to high and find 88.6, 88.6 break right now? Does it, bro? This is working out perfectly because as an investor, we don't want Bitcoin at 73K when we can buy it cheaper. All of us would rather buy Bitcoin at 55K than 75K. And if you don't know why, go ahead and do some math for yourself after this stream. If you put $1,000 into Bitcoin at $60,000, actually, let's do this right now. If you put $1,000 of Bitcoin at 60K price and it goes to 100K, somebody tell me, how much money do I make on this investment? Assuming that you're not using leverage at all, just straight up Coinbase, you're buying it spot, no leverage, no margin, just straight to the point. Well, that coffee is starting to kick in, ladies and gentlemen. I'm starting to feel good. Starting to feel much better. The charts are becoming a little bit more clear. Somebody answer this question, bro. Unless everybody here failed like third grade math, what are we doing right now? I know the guys. I know the U.S. education system is trash, but it can't be this bad. Any Soviet Union kids in here? Any fucking anybody from India? Anybody that went to a school system where algebra was a third grade requirement? Anybody? Anybody at all? Whoever's saying $40 in the chat, I'm about to just I don't even know. I'm about to go play in traffic at this point. This is fucking ridiculous. Fam, I make jokes about eating glue in school, but were you guys actually eating the glue? Dad, can you help these people out, man? I'm about to lose my mind. I know my pop's sitting here shaking his head. This is madness. I have $40 in my in account any trade. Chinmate, bro, stay out of this one. This roasting keeps getting better. No, I'm just getting started, bro. I'm getting fucking mad now. Joel says like $600. Yo, son. Dizzy said he's not eating the glue, he's sniffing the glue. No, some of y'all were eating the glue. It's still stuck in there. No, Dad. No, this is crazy. $40. Yo, son. He said 4K? Oh my God. Yo, bruh. He said 4K was looking at it like $100. Roy's about to get a heart attack. I'm just shocked. I'm just trying to see if I'm being trolled or not. All right, Alfonso says 1,166. I'm gonna double check this and see if he's right. Oh my God. Updated invite. Oh, I did miss that meeting. Not good. Says, do you sip lean? Brother, I might need some after this conversation. It seems like anybody who said $40 is probably sipping the lean. I've been listening to too much of that future, huh? Fucking playing too much of that young Dolph. That's what's happening. RIP, right? We'll do 100K divided by 60.6 times 1,000. I got 1,600. What do you guys have? So you'd make $600. Yep. Noah was right. Noah, I think you were right. I'm stoned, not wanting to figure math now. But you should be able to do this when you're stoned. All right, Alfonso, I appreciate you, brother. You used to get on my nerves, but maybe whatever that thing was that caused you to throw out all those comments the other day is also causing you to be a fucking genius. Okay, good stuff. He says 60 cent. Oh, dizzy. Oh no. But that name is very, very fitting right now. That's how I feel reading your comments. Abdon, there it is. Noah got it first. Noah, congratulations. I didn't want to read that number out loud because I felt like I was going to catch something, but you're correct. Okay, now if you do the same thing from 70,000, it's a significantly different number. And you compare both of those and see which one would make you the most money, and you realize that $600 versus, let's call it, I'm going to take a guess here, about $500. I'd rather take the 650 bucks in profit than the 500 bucks in profit, and that's why it's important to get Bitcoin at a solid entry price. Now, if you don't know how much money you're going to make on your investments, that if you invested in Bitcoin at 60, and if it goes to 100, how much you would make, you're missing a key part of the sort of like the math that you should be doing when investing in crypto, because the whole game is just return on money. Okay, so this is my strategy for this year. I'm going to kind of give this to you guys straight. CA members, I'll give you my exact list of the names I'm picking, but I'm putting $1,000 into 15 different random names. And by random, I don't mean completely random out of a hat. I mean, I know these projects. The majority of them have been around since the 2017 pump, and I'm just going to put 1,000 into each one of them. I've been invested in crypto since 2016. I bought my first Bitcoin in 2014. In 2016, I tried to guess, or I tried to do analysis to find the best opportunities. You guys know what I realized is tokens like, let me find the stupidest one. Tokens like Cum Rocket outperformed legitimate infrastructure level technology because of their meme potential. Okay. And I kept trying to do all my research on the project, the development team. I read all the white papers. I was out here reading fucking white papers for blockchain companies with no technology background. I felt like an idiot every day. I had to read books. Shout out to Andreas Antonopoulos, right? Mastering Bitcoin, Mastering Ethereum, the greatest technology books ever written about Bitcoin. If you guys want to know the anatomy of Bitcoin inside and out, how the network operates and everything in between, go and check out Andreas Antonopoulos' book, Mastering Bitcoin. So I I realized that whatever I thought was going to be a big mover was not. And then you have like a random coin like Doge or Shiba that gets looked at by an Elon, and those things pump off. And so don't try to play God and guess which ones are going to be the big movers. You're going to find 15 random names, or not you. I'm finding 15 random names to put my money in. Now, what's going to happen is imagine if 14 out of the 15 investments go to zero. Now, everyone who's been in crypto long enough knows that tokens don't typically go to zero. Your $1,000 will go to 500. Your $1,000 will go down to 200 or 50 bucks. Zero is a tough one. Very few coins have ever gone to full zero. Okay? But just imagine 14 of them go to zero and one of them makes you 20x. So you make 20,000 on one of those names. You lose 14,000 on the other, you still make $6,000 in the next bull run. Now, the thing that I've learned about bull runs is if you have 15 names, you give yourself a significant chance at multiple of those being successful. And so I'm expecting 3 to 5 of those names to do anywhere between 3 to 5x returns. I'm expecting a few more of those names to do 10x plus, and I'm hoping one of those names does a 50x plus, but that's just wishful thinking. And I'm expecting at least half to go to zero. So I'll lose $7,000, or let's call it $7,500. A few of them, let's say $3,000 winners all around, a $10,000 winner, and then potentially a $20, $30, $40, $50,000 winner. That is how to turn $1,000 into a significant amount of funds while not trying to play God, while giving yourself the best chance possible because you have so many chances at bat to be right. Cool. Okay. Good stuff. This is more info that I wanted to give out. That math example kind of got me going. The $40 kind of bummed me out a little bit, but we got there in the end. Can I analyze gold? Jesus, not after all that, right? Not after all that. Says Dizzy has left the chat. What's up with Hong Kong and them accepting ETFs? What's up with Hong Kong? To be honest, I haven't looked at Hong Kong since they got taken back over by the mainland. They used to be an international hub for investing, kind of think Switzerland, but of the East. Singapore has taken the majority of that flow, so has the US, and so has Saudi and Dubai. Hong Kong had a series of very important protests. I traded the Hong Kong dollar one time. Greatest trade of all human history, in my opinion. The market was at the dirt. We ended up trading it right before the protest started. A lot of the protesters were shipped back to mainland China. That ended the protest pretty quick. International money left Hong Kong in record droves, and no one's looked back since. So what used to be an international hub, kind of this third party, this was the capitalist arm of the Chinese communist regime, right? We can't do the capitalism on our soil because God forbid that we expose ourselves. Long story short, guys, they pretend to be commies, but all their money comes from capitalism, right? And so Hong Kong was sort of that beacon of hope and sort of like a bastion of common sense in that area. And then now it's been stripped away. Would I put my money in Singapore? None of my fucking wildest dreams. Imagine having that many hostile neighbors and then parking your money there. That's just stupid. That's why the US is seeing so much inflows. Now, clearly, US equities are taking a hit today, but on the long term, if you're going to look at geographical positioning, you would put your money in the US before you put your money in any other country. By far. When was the last time a US war was fought here on our soil? Right? I mentioned yesterday on the streams and Sunday on the streams not to enter the gold buys at this re-entry level at 2365 until you have a clear break through the zone first. So until you have this, okay, you can buy from down here. I'll give you guys God, it's so hard not to give away real sauce, but while also giving you guys enough practical knowledge to make money. Because I'm just going to give you the level, but like explaining it is where the magic happens. And I'm trying to find a fine line here. Take the master class so I don't have to fucking hold my tongue. How about that, people? Take the master class so I can give you guys all the real info without having to kind of play this tiptoeing game. I don't want to have to choose between doing these live streams and speaking my mind and being honest and just kind of letting it rip, and then also having to be respectful of the folks that put in real time and effort to learning these strategies. So don't just make my life easy. Click the link in the description, grab the masterclass so I don't have to hold back and just give you guys some solid real info. 2347 is that re-entry price for gold. All right. We formed this artificial floor here. The market could rip to the upside directly from that price zone. I wouldn't enter unless I saw two conditions. The condition would be a breakthrough that structural support at 2340 or 2370, a breakthrough. Potentially a tap of 2347, which is the most likely zone to retest before we continue. And then a closure back above and a higher low. The most probable trade requires all four of those confirmations: the violation through the zone, the break back above, and the closure back above, and then the higher low retest above that support. So think about it like someone's drowning. They finally get above the water and they're kind of just sitting on that ledge. You got to see them sit on that ledge and put their, gain some stability here before it continues to the upside. So, Chart Addicts members, if you are more advanced in the strategy, you can start to scale from here. Okay, so testers go in at 23.47, re-entries go in at the break of 23.67, and re-entries go in at the retest of 23.67. Any questions, comments, concerns about gold? Hey, Roy, how often you look at treasury yields to get your bias? If so, would you explain that for dummies? I don't use it for my bias. I guess I use it for my higher time frame directional bias. The bond market is one of the most important markets in the world, probably more important than the stock market. Okay, because the stock market funds companies. When you list as a publicly listed company, you raise a bunch of money from Wall Street or from, let's just call it the American investor or the global investor. They give you money to run your company and you get to scale and grow. Treasuries are the exact same thing, but for governments. So a government bond is a loan that you make to the government. And trust me, loaning money to the government is probably one of your best bets because they always pay, right? They have a money printer. So a bond is a loan to the government that they will repay with a percentage yield, a percentage return on your investment. There are different durations for these bonds, obviously. So you have months, 3 months, 6 months, 12-month bonds. You have years, so 2 years, 3 years, 5 years, 10 years, 30-year bonds. So you can loan the government money up to any duration. Which one do you guys think pays more? If I loan the government money for 3 months or if I loan the government money for 10 years? Which one do you guys think is going to pay me more in percentage return? Which one do you guys think they will pay me more to borrow my money, to borrow it for 3 months or to borrow it for 10 years? A friend of yours comes up, says, hey, I want to borrow some money. Be like, oh, how long? 3 days. Okay, not bad. Just give me back the $20 when you get a chance. What if they say 10 years? Buddy, you're giving me back more than that $20, fam. If you want interest. Yo, CA members, you guys are hurting my soul today. There's no activity? None? I think there might be a lag in the stream or something because I don't. Okay, anyways, I'm just gonna keep going. Fuck the comments. There's different durations, and so bond yields are basically kind of like a proxy for how the government is doing and the state of both inflation, economic health, and other key factors that the Fed watches. So if you look at, here's the correlation between bonds and their yields. Bond prices, if they go up, so buying the actual bond from the government is now more expensive, they're going to pay you out less. So yields, the percentage yield goes down. And vice versa. So when bond prices go down, yields go up. Yields typically follow interest rates. And so as interest rates are higher, yields are typically higher, but bond prices are lower. The issues that start to come with bonds specifically, and this is what I'm watching today, is the duration risk, which is if a bank is holding these duration assets, let's say for 3 years, okay? And after 3 years, the bond is going to mature and they're going to get their money and more. So the bank is making a profitable trade. But right now they're sitting in drawdown because the prices of the bonds are in the dirt, okay? The yields might be high, but the bond prices are in the dirt. And so if a lot of people start to want to pull their money out at the same time, the bank has to liquidate a lot of these trades in drawdown. And that causes a lot of the problems that we're seeing with bank failures across the country, specifically Silicon Valley Bank, and I think most recently the New York Liberty Bank. All right, 10 years, 10 years. Okay. Good stuff. So you will always get paid more to loan money out for the longer term. So the relationship between bonds and stocks is typically opposite, but lately we've kind of seen traditional investments, which is stocks and bonds primarily, stocks and bonds. You can add real estate investment trusts here, but just stocks and bonds first. We've seen traditional investments kind of moving at the same time, and then we've seen alternative investment classes moving separately. Okay, so we've seen the dollar and gold moving at the same time as a safe haven. And we've seen Bitcoin just sort of be a hedge for all of these. So there's been some kind of mismatch in the correlations like we've normally seen them. The most important thing to remember is that interest rates directly impact the bond investors, and that the higher the interest rate, the higher the bond yields, but bond prices go down. So you're sitting in an unprofitable investment until it comes time for that bond to mature and for you to cash out that premium. Long time pays more. Good stuff. Okay. There's a 20-second latency on the YouTube stream. Joe Dallas, thank you for the insight. Probably the most insightful thing I have read today. Why'd you delete the comment? But it said the smartest thing out of everybody in the last, and then just deletes the only rational, the only, I don't, I'm to call it a day. US30 price made it to that same zone as yesterday. Closure above. Do we have an 88.6? Pardon me while I get surgical here. We can make that work. US30 traders, y'all see exactly what I'm saying here. Longs up to 38,057. Stops below the low. Body of the candle closure above the fib. Solid wick rejection here on the 30. You could wait for a re-entry right at 37,680, or you can enter now with a smaller position size and just account for the difference in the stop loss. This is tough, obviously, because we just saw what happened with NASDAQ breaking through the zone. And so this is a tough one for me. I don't personally trade US30, but if I was going to, what I'd look for is that break and then break back above. If you want to enter the tester entry, fine. But personally, I think that we have a little bit more room to go before we recover. But that's the general trade idea. I'd say this re-entry. Stops a bit wider. Kind of get away with a 3.2 to 1, maybe even a little bit lower. 3.1 to 1. Make sense? Okay, cool. NASDAQ blew right through the zone. No trade as of yet. Alerts. Set your alerts for this higher time frame trade. These higher time frame trades are some of the best opportunities. You can enter big positions here, shave off profits as the market continues to run. If you're trading futures or anything that has same day expiry, then you're going to have to play this thing very different. You're going to have to wait for the market to get to the zone, stay on the smaller time frames, and look for some kind of re-entry model based on whatever your risk parameters allow. If you're a swing trader, if you guys are trading CFDs or any instrument that allows you to hold beyond the session time, then this is going to be one of the best opportunities of the year, in my opinion. We will very likely blow through first, but on the break back end, 17,500, easy pickings right here. And then obviously a little bit lower, we have 17,375. So we either get this or we get this. Two prices, two options. Wait. Put a 1 in the chat if this is clear. Put a 1 in the chat if this is clear. Okay, now we're awake. Took a bit of time here. All right. Anybody else have questions, comments, concerns? That's what I'm looking at. No trade for me today. I hopped on here, almost caught a re-entry, but gladly I waited a bit and allowed the market to break through the zone first. Okay. Patience pays in a lot of different ways. Sometimes avoiding the bad trades is the best way to go. Yesterday we took the chance. It was at a really attractive price. The trade already happened during London, and so that's why I'm not pressed on catching this re-entry at the end at that 17,660. This is the happiest thing I'm going to experience all day. If you guys want to know what makes Roy happy, seeing Bitcoin do exactly what we expected, but more importantly, giving us a discounted price ahead of the Bitcoin halving. This is going to be the opportunity of the year. Now, is most of my money going to come from Bitcoin investments? No. I told you guys I have those 15 random names. Yeah, Bitcoin ain't on there. But the whole goal is to make as much money as possible and then transfer it all over into Bitcoin. So convert it into Bitcoin and hopefully profit on that deal. But I'm less interested in making a profit on the exchange, more interested in holding the greatest asset that the world has ever created. Okay. All right. It says US30. Indra, we literally just covered US30. What are we doing here? All right. That's what I got. Happy, safe trading, everybody. I'll keep you updated on anything that has to do with fundamentals. What did Jerome Powell say yesterday? To be honest, not much. Same thing he's been saying, except the market maybe just decided to pay attention for once. He said, we ain't cutting rates. Let's look at one more thing before we hop off here, which is the Fed rate, CME tool, Fed watch tool. Let's look at the market's predictions. So next Fed meeting, 14 days. We got 2 weeks left. Let's look at the Fed's or the market's predictions about a rate cut in the next few Fed meetings. Let's take a look here. April Fed meeting. Not April, that's 5th. That's the May Fed meeting, 96% chance rates stay the same. There's a 4% chance of a rate cut. So obviously not expecting a rate cut. In June, there's about a 15% chance, 16% chance of a rate cut. July, a bit higher, 38% chance of a rate cut. And then as we go into the September and November meetings, there's a very high probability of a small rate cut, 25 basis points. Here's what you want to remember. A 25 basis point cut at the end of the year is the same as not having any cuts. All right? Because there's no meaningful change in the economy. It's not like if they cut rates 25 basis points, I'm going to walk in the car dealership and they're going to offer me 25 basis points less on my loans. They're going to keep the loan rate the same. Same with mortgages. Same with credit cards. 25 basis point change does absolutely nothing, except it's like a signal to the market. Hey, I'm on your side. Hey, we've started the cutting cycle. It could take 2 years, but hey, at least we started, right? Better late than never. That could lead to some optimism. But honestly, I don't expect any rate cuts. Maybe we get 2 at the end of the year, but it's the same as not getting any. Are markets crashing because of that fact? God, I hope not, because these are the most sophisticated investors in the world. And if they can't listen to Jerome Powell say very clearly that there's no rate cuts, then we have no chance, right? Like Jerome Powell's been screaming it from the rooftops. So that's what's going on. We might actually get the swing trade before the day is done. So I'm adding a second alert below the zone in case we get that grab. Alerts are everything, guys. If you're going to walk away and go do your job, make sure you're not missing the trade that you spent either weeks waiting for or anything else. What's your opinion regarding rate cuts, rate hikes, considering inflation? There it is. What's up with gold? Scroll back in the live stream and check if we covered it before asking. Take it easy, y'all. Happy and safe trading.